Hello friends, welcome back to our channel, where today we are going to discuss the biography of one of the wealthiest individuals in the United States, Mr. John Malone. So, if you want to know about his life, his career, his early beginnings, and his personal life, stay tuned until the end of the video. So first, let's start with his early life. John Malone was born on March 7, 1941, in Milford, Connecticut, USA, into a modest middle-class family. His father was a contractor and builder who instilled in John a strong work ethic and discipline. His mother was a homemaker who was passionate about music and art, which sparked John's interest in creativity and aesthetics. From an early age, John exhibited exceptional curiosity, a thirst for knowledge, and a fascination with science and mathematics. He was particularly drawn to electronics and tinkering, which foreshadowed his later involvement in the cable television industry. After completing his early education at Hopkins School, one of the oldest private schools in the United States, Malone enrolled at Yale University, where he pursued a bachelor's degree in electrical engineering. He graduated from there in 1963 and continued his academic journey at Johns Hopkins University, where he obtained a master's degree in industrial management. During his time at Johns Hopkins, he met his wife, Leslie, whom he married in 1963. They have 2 children together. In 1965, Malone joined Bell Labs, the renowned research arm of AT&T, where he worked as an engineer. This provided him with valuable insights into the complexities of telecommunications and networking. However, it was at McKinsey & Company, where he served as a consultant, that he honed his analytical and problem-solving skills. These early career experiences laid the foundation for his future endeavors in the cable television industry. In 1972, Malone joined General Instrument Corporation as a consultant, where he played a pivotal role in restructuring their troubled cable and communications division. His contributions caught the attention of Paul Allen, the founder of Telecommunications Inc., TCI, who brought Malone on board as president and CEO in 1973. This marked a significant turning point in Malone's career and the trajectory of TCI. When Malone took over TCI, it was a small regional cable operator serving fewer than 500,000 subscribers in the Midwest. The company was burdened with substantial debt and limited resources, but Malone saw immense potential in the cable television industry. Despite skepticism from many quarters, he invested heavily in upgrading TCI's infrastructure, expanding its service area, and introducing innovative programming, including the first all-news channel, CNN, which resonated with viewers and attracted a growing audience. As cable television gained popularity, Malone recognized the need for consolidation in the industry. At the time, there were hundreds of small independent cable operators with overlapping and competing networks. This fragmented landscape presented challenges for both consumers and content providers. Malone believed that consolidation could lead to efficiencies and economies of scale that would benefit all stakeholders. He began acquiring small cable operators, expanding TCI's subscriber base, and creating a more comprehensive network. Malone's ambition and aggressive acquisition strategies earned him the nickname Cable Cowboy. He employed a variety of tactics, including debt leverage buyouts, equity swaps, and tax-efficient structures to acquire cable systems. These deals often involved complex negotiations with multiple parties, including cable operators, content providers, and local governments. Malone's deep understanding of the technical and economic structures of the cable business enabled him to structure transactions that were mutually beneficial and created long-term value for shareholders. During the 1980s and 1990s, cable television became a dominant force in the entertainment industry, surpassing broadcast TV in terms of popularity and reach. TCI's growth mirrored this trend, and by the end of the 1990s, TCI had evolved into the largest cable television company in the United States, serving more than 14 million subscribers nationwide. Throughout his tenure at TCI, Malone faced numerous challenges and criticisms. One of the most significant was the perception of cable operators as having monopolistic tendencies. As cable television became ubiquitous in homes across America, concerns arose about the lack of competition in many markets. Critics argued that cable operators, including TCI, stifled consumer choice and engaged in price gouging. Malone, however, maintained that cable operators provided a valuable service that required substantial investment and that competition existed in the form of satellite television and other entertainment options. Another notable struggle occurred during the development of the Internet. Early Internet service providers, ISPs, saw cable companies as potential competitors and sought to regulate them as common carriers. This regulation would have mandated that cable companies open their networks to any ISP at wholesale rates, potentially undermining the investments and innovations of cable operators. Malone and other cable executives successfully fought against this regulation, ensuring that cable companies could offer Internet services on their own terms. In the late 1990s, as the Internet and digital technologies converged with the media and entertainment industry, Malone began to anticipate the need for greater integration between cable television, broadband Internet access, and content delivery. In 1999, he orchestrated the sale of TCI to AT&T for $48 billion, a transaction that not only made him a multi-billionaire, but also gave him the financial resources and freedom to pursue new opportunities. At the time of the sale, Malone held approximately 27% stake in TCI, which translated to billions of dollars. This windfall enabled him to diversify his investments, acquire significant stakes in various media and entertainment companies, and pursue his personal interests. With the proceeds from the sale of TCI, Malone refocused his efforts on Liberty Media, a company he had spun out earlier to hold TCI's programming assets. Through Liberty, Malone acquired significant stakes in companies like Discovery Communications, QVC, Starz, SiriusXM, Lionsgate, and Formula One. These investments aligned with Malone's vision for the future of media and entertainment. He recognized the growing importance of content, whether it be factual programming, movies, or live events. Liberty Media's portfolio under Malone's leadership diversified into various forms of entertainment, including cable programming, satellite radio, filmed entertainment, and motorsports. This diversification not only broadened Liberty's revenue streams, but also positioned Malone as a key player in several sectors of the media and entertainment industry. Outside of his business interests, Malone's personal life has been marked by his passion for conservation, ranching, and sustainable land management. A large landowner, he owns over 2 million acres across states like Colorado, Wyoming, New Mexico, and Maine. Malone's approach to land management emphasizes balance, integrating conservation efforts with ranching activities and promoting sustainable practices. Over the years, Malone has been involved in various philanthropic endeavors, supporting causes related to education, healthcare, environmental conservation, and scientific research. Notably, he has been a strong supporter of his alma mater, Yale University, where he has donated significant funds for scholarships, capital projects, and research initiatives. Despite his immense wealth and influence, Malone has maintained a relatively low public profile compared to other high-profile billionaires. He has shied away from publicity and kept a significant portion of his personal life private. This has contributed to a sense of mystery and intrigue surrounding one of the richest men in America. Malone's approach to investing has been characterized by a combination of long-term vision, patience, and a willingness to think differently. He has consistently focused on industries and companies that are at the forefront of technological change or cater to evolving consumer preferences. This forward-looking perspective has enabled him to identify growth opportunities that others might have overlooked. For example, Malone's early investments in cable television and later in broadband Internet access and content delivery positioned him at the forefront of the digital revolution. Similarly, his investments in companies like Discovery Communications and QVC tapped into the growing demand for specialized and niche programming. Throughout his career, Malone has demonstrated a willingness to go against the grain and take contrarian positions. He has often been willing to invest in companies or industries that are out of favor with Wall Street, betting that market sentiment may eventually shift in their favor. This contrarian approach has enabled him to capitalize on market inefficiencies and generate attractive returns. One of the key aspects of Malone's investment approach is his ability to identify undervalued assets and unlock their potential. He has a knack for recognizing the hidden value in companies or divisions that have been overlooked or underestimated by the market. For instance, Malone's acquisition of TCI and subsequent investments in cable television infrastructure and programming breathed new life into the industry. Likewise, his investments in companies like Starz and Lionsgate enabled these businesses to thrive and produce high-quality content. Malone's patient approach to investing has been instrumental in his success. He is not driven by short-term market fluctuations or the need to meet quarterly earnings targets. Instead, he focuses on identifying companies with strong fundamentals, a competitive advantage, and a long-term growth potential. This allows him to ride out short-term market volatility and capitalize on long-term trends. Despite his track record of success, Malone has not been immune to setbacks and controversies. His investments have not always panned out as expected, and he has faced criticism for his business practices and the concentration of media ownership. Nonetheless, he has consistently demonstrated resilience and a willingness to adapt his strategies when necessary. Looking ahead, John Malone's impact on the media, entertainment, and technology industries is likely to endure. His pioneering role in cable television, his investments in content delivery networks, and his foresight into the convergence of technology and media have shaped the way we consume entertainment today. While his personal life remains largely private, his business dealings and investments continue to captivate the public imagination. As one of the wealthiest individuals in America, Malone's decisions and moves continue to send ripples throughout the financial and media worlds. Whether it's through his investments in emerging technologies, his support for educational institutions, or his conservation efforts, Malone's influence and legacy are far-reaching. Thank you for watching the video. Don't forget to subscribe to our channel for more interesting videos about inspiring people and their stories. Have a great day.